May profits be upon you. I hope you had a great weekend and you're looking forward to a very news filled, volatile week ahead, ending with NFP on Friday. All right, just know that the euro and the it was the Bank of Canada and somebody else. I can't remember who it is, but there's news all week. All right, and we're gonna have employment numbers on Wednesday, and then we're gonna have NFP on Friday for the U.S. dollar. I mean, it's going to be some major stuff going on. Okay, let's take a look at the indices. All right, this is the second part of a two-part video. All right, the first part was on the FX majors. All right, euro, USD, euro, US dollar, the British pound, the Swiss. What is that called? The Swiss franc. The and who else? Aussie dollar, and I think that's all of them. And the Japanese yen. I'm sorry, and the Japanese yen. All right. So be sure to check that out. Now I'm looking at the daily. Right. I want to give you a breakdown, a full kind of breakdown here. If we can just go to the monthly, I want you to see that I got some notes up there, but I don't want to, take you through here as like a PowerPoint slide. What happens is you can see that price has swept the high here. All right, this old high here. And when price sweeps the swing highs, what is expected is for price to pull back. All right, and because this is an external, um, this is external liquidity, and the way price moves is from external to internal, and then back to external, and then into internal, and then back to. And that's how it makes higher highs and higher lows. All right, and the external points of liquidity are at the highs and the lows. The internal are at the fair value gaps, like this one. All right. And this is where price could potentially pull back into because we don't see another fair value gap in this rise. So it's either going to be a fair value gap or it's going to be an order block. All right. This is an order block here. A series of candles traded past the high of which, and then we're looking for a fair value gap to have been created on its way trading past that high to validate the order block. So when price comes back to it, we know that it will mitigate that order block. It'll mitigate that fair value gap. All right, rebalance this inefficiency and then continue higher. So right now, we're looking for that pullback. Now we see a pullback already, but is that a deep enough one? All right. In here, did we mitigate some fair value gaps on a lower time frame? I don't know. Let's take a peek at the weekly, and what we can see is those notes again. All right. We got some separate notes there. Talking about how could we see higher prices? Price is made a higher high, higher low. Look at this. This is an order block here. All right. And what happens when we see order blocks? We see when price moves away. We want to see those fair value gaps. All right. Like here. And we want to see price move away and then return back to it to mitigate orders. All right. To mitigate out of the short orders that price had in, institutions mark money rather, is mitigating out of so they continue its longs. All right, and continue with the longs that it took here. Yes, it took shorts to go long, mitigates out of those shorts, and continues long. All right, this is how the market moves. All right, now we have bullish fair value gap here, a bullish fair value gap here. Price is sitting in that. So when price is sitting in a fair value gap, I cannot help but to be bullish in principle because it's in a bullish fair value gap. All right. Now, price could try to fill this wick and maybe mitigate down here, but until that happens, I'm going to still, if it starts to close past the fair value gap and it takes out swing lows along the way, then that's when I change my bias. But right now it's bullish. All right, we're sitting in here, and I'm looking to see if price will pull down maybe about to 50% of this big wick, and then turn around and go for higher prices. Let's take a look at the daily, and what you can see is a bunch of mess. That's what you're going to see. All right, we're in this fair value gap. We're in the bullish fair value gap. Price has created fair value gaps going the opposite way, opposing fair value gaps. You see how price created this one. If price comes up here, there's a chance that price could want to power on through here. But here's what you need to remember. Look at, I'm going to flash up the weekly fair value gap. That price is overlapping with this daily full value gap, fair value gap. All right, the higher time frames rule. Remember that higher time frames are more stronger, and if you have a higher time frame fair value gap with a lower time frame fair value gap opposing it, well, chances are uh, uh, price will overcome those bearish fair value gaps. And the reason why you'll see those fair value gaps is because price has to pull back. It's in a retracement. It's in a retracement because it just took out those swing highs, and then it'll go higher. All right, so we're going to move on. That's what's that? That's the NASDAQ. All right, let's look at the S&P. All right, if we go to the higher time frame, let's go to the monthly real quick. All right, that's the one I wanted. What am I doing? Okay, all right. You see, it's very similar, very similar setup to the NASDAQ. All right, took out the swing high, and you see the price pull back into a fair value gap. All right. Will this fair value gap hold is the question. Well, you see the answer. It was a very sharp turn, a very sharp turn. It took out the high. It swept the high, but did it trade through that high? There's a big difference. If it trades through the high with a close above that high, above a close above that previous candle, the previous monthly high, then we know that there's an indication that price wants to go higher. All right. When it closes back within the range of the previous candle, no matter what time frame you're on, because price is fractal. What you see on the higher time frames, you're going to see on the lower time frames when it comes to price action. Okay. Because it closed within the trade the range of the previous candle, there's a good chance that price won't go higher, won't swing, take that high out on the next candle. There's a chance that price may either be an indecisive candle like a doji, or it may go lower. It may swing. It may come for the low of the previous candle, the previous monthly candle in this case. Let's look at uh, the weekly. Maybe we can get some insight there. All right. You see, you can freeze and pause or whatever and take a look at the notes. We may see price sweep, the swing high, and all that good stuff. What happens is you can see the price action here. All right. Price took out the high, did not trade through it. All right. Price took out the with the next candle, the next month on April. In April, it took out that previous high. All right. But it did not trade through it. All right. The next candle is what I described earlier. It didn't take out the high. All right. Just like the one, it didn't take out the high before. So what happened? It took out the low of the previous candle. All right. Now, but look what it did. It traded back within the range of that previous candle. So what do we think about this new candle that's going to happen here? That's going to form? There's a good chance. All right. It may end up an indecisive candle, or it'll be going for the high. And I think that's exactly what's going to happen. It's probably going to take out that high. It may even take out this high. All right. And if it does that, we're expecting a retracement. Again, we're going to be expecting a retracement because it took out a swing high. I hope you're keeping up with me. I'm moving kind of fast. I understand. But I can't do this all day. All right. If we go to the S&P, go to S&P. All right. I mean, the S&P, the daily, we can see prices making its way down, making its way down. Why? Because it's retracing. Why? Because it took out that swing high. I keep repeating the same thing so you can get it, right? You can see Friday's candle, totally in go, the previous day candle, sweeping low, and then the high with momentum, all right? There is an OB formed. Where? Right here. This is the OB. This is the order block, all right? And we have where the order block high is going through the fair value gap that are left behind. This is a validated order block. I'm expecting that, fully expecting that price will hold once price gets here. This is a got a couple of confluences going here, so it's a pretty strong order block. All right. But what about here? You saw that Friday's candle overtook Thursday's candle, right? And it's pretty strong. It closed outside the range. I'm expecting price to take out that high. The when the with the new candle opening today, I'm expecting price to take out that high. Will it close up here? Or we're going to find out. But I think that we may see a test of that Thursday high there. All right, I think that we may see a test, and then perhaps price goes a little higher, so heading towards those highs. All right, this is going to be an interesting week because we got NFP, and what you normally see is price start to move sideways, the U.S. dollar anyway. All right, so that kind of leaves uh, the uh, the market deciding between being deciding between a a risk on or risk off environment. All right, so let's look. uh, I'm not going to do a whole lot of coverage of the the Dow because it moves a little more. uh, it's a wild compared to the NASDAQ and the S&P. But what you can see is price made a swing high here. All right. This swing high was made in April. All right. Price pushed back down, uh, taking out all of this low resistance liquidity here, all these lows, and mitigated the fair value gap. Right. We pushed up, formed an order block here. All right. We pushed up, but we failed to take out that high. What does that mean when you have a swing failure? That means this low is probably going to be targeted for liquidity. All right. So we push down and we're creating fair value gaps along the way, letting you know price has the intention to keep prices down. And, these are like ceilings. All right. So what do you conclude? We're down here mitigating this order block. Are we going to see higher prices from here? Well, we have uh, bearish fair value gaps. This one has a swing low at the intersecting that fair value gap there, so it's going to be pretty sturdy once it gets up here. All right, this is rangy. All right, and that's what we're probably going to see in the markets because of the U.S. dollar and the NFP happening on Friday. Until after Friday, we're not going to see a whole lot of. We may see a whole lot of indecision. All right. So, but I'm looking here first. We're going to see what the reaction once price reaches there because we could see lower prices here. All right. We may come for those swing lows. All right. I don't want to spend too much time on the yen of the Dow, but it's a wild one. And while I am bullish on the other two, the Nasdaq and the S&P, this one I'm bearish. This one I'm bearish in the short term because we have fair value gaps right above price, and I can see maybe we might get through this one, but maybe not that one. And I would be looking for that low to get hit and the mitigation of this fair value gap. All right, that's where I'm at on it. I don't know where you at on it. All right, let's look at oil real quick. All right, I'm going to the monthly. All right, I want you to see. All right, it's kind of crazy here. You know, this is news filled when you see big moves like that. That's a very bearish move, right? And then you see the recovery. All right, you see the correction of it. All right, we took out those swing highs there. That swing high there. That swing high there. What do you expect? A pullback, right? We pull back to what? Internal liquidity, right? Because this was external liquidity. All right, we mitigated this fair value gap here. This is also a bullish order block. You see the big institutional candle there, and then price taking it over, trading through it, leaving a fair value gap here. This is a very good area to expect price to hold. All right, and that's exactly what happened right at the point of the order block here. All right, price pushed higher, took out a little swing high. We pulled back. It respected the low, pulled up a little bit. So what am I expecting now at this point? Now this is on a monthly. This is on a monthly. We got to look at the lower time frames to get a good, clear narrative. Excuse me. All right. So what do I got here? What are we showing? I'm losing my mind. That's what I'm doing. I'm losing my mind. All right. Price pulled back into this order block here. We pushed up higher. And for weeks, we've been in this bit of this consolidation here, sitting on top of this bullish order block. I'm looking for price to quite possibly take out this low, because this is the low candle. This is the swing low. I'm looking for price to take out that swing low and start to pull back up. Why? Because we have to retrace after taking out swing lows. You keep hearing me say that, right? All right, that's what happens. All right, so if price goes back up into this consolidation, I'm looking forward to head towards these highs. All right, this is the manipulation. Just the manipulation that you see that this wick. You see how it took out the previous high, where that red line is. All right, and then we come back for these lows. I'm looking for the lows to get manipulated and then price to continue higher. That's what I'm looking for. All right, I am bullish in oil. All right, let's go to the daily. Let's go to the daily, and that's not the daily. All right, work with me. All right, and you can see the notes again. All right, but what I want you to see is the monthly order block here. I'll flash it for you. All right, that's not flashing. Okay, because that monthly is down lower. That's why. It's a it's a weekly. I got this thing wrong, man. That thing. I'm sorry. All right. Quick quick edit. Quick edit. All right. So we have this. We have that done. All right. I got too many things open. Too many things open. What is this? All right. Yeah. So we can see that there's a weekly bearish fair value gap overlapping the daily fair value gap. So that kind of it's a confluence, strengthens the argument that price will hold here, and it's been tested. It's been tested and sending price down lower towards these relative equal lows, which is a very big draw on liquidity, a very big draw for price to come and get. All right. We also have this nearby swing low as well. If price comes down here and sweeps these lows, that'll give it the fuel it needs. Now, there's some low resistance liquidity here going into this bullish fair value gap. Price could come down here, but I don't know if it's going to get that low. I really don't know. All right. We can take out this low, this swing low here, and then you can start to see price rally up. All right. Again, uh-oh. What's going on here? I got technical difficulties. I don't know what's going on here. All right, there you go. So, uh oh, I got a countdown here. This is the last one. All right, so I'm looking for shorts until we hit these lows, and then we're going up.